Another very interesting sector, one that game theory has a lot of experience in, and certainly John has a lot of experience, is finance. I think very, very interesting kind of these questions around, what is happening in finance right now. There's economic impacts, sort of from a people perspective, from an economy perspective. What is the role of finance in consumers' lives, and I suppose consumer finance at this moment in time? And I've seen some great creative executions from a number of financial brands out there. So John, in terms of the finance market, where are we at? What sort of questions are marketers needing to ask? How are consumers behaving? A little bit of an insight onto that, and what next? What should marketers be really thinking about over the next 3 to 6 months? Over to you, John.
Thank you. I'm going to focus more on retail banking. In finance. I'll leave insurance to one side for now, because I guess motor insurance, household insurance, they're sort of almost standards that will always be required. Whether you're driving your car or not, you'll need some form of insurance for it. I'll also not focus too much on the payment card industry, because again, the demand for their products is fairly obvious, especially with more of a move towards online sales. You simply can't use cash in that environment. So if we look at retail banking, before we sort of talk about anything, I guess it's worth just reminding everybody that Fitch has downgraded a number of banking stocks recently, including Barclays and Co-op in the UK, and other banks wider afield. And the primary reason for that is vulnerability, increasing vulnerability of the banking sector to what is perceived as a growing risk of bad debt and defaults. And of course, if one bank goes down due to the interrelated nature of modern banking, will have a knock-on effect on other banks elsewhere. And some banks are really heavily exposed. We know that ING have got big exposure to oil, for example. I guess we all know what happened to oil futures recently, heading into negative territory for the May closure. And we've got others. So some of the French banks are heavily exposed to aviation. Again, aviation as a sector is, there's not a lot of activity there at the moment, and there probably won't be for some months to come. So again, bank by bank, we need to look at their overall books. I think from a retail banking sector, though, the biggest issue that's facing sort of like the banks on the high street that Joe Public will know is the spread. It's the net interest margin. So the spread between what a bank can charge on loans and mortgages and what it has to pay out in current accounts and savings accounts, more realistically. And that spread is narrow, potentially getting narrower, and doesn't show any sign of increasing over the next 3 to 4 months. So that places tremendous earnings pressure on banks. It's very, very hard to make money at a time when costs are inevitably going to increase. I guess in most countries there are schemes that have been introduced by the government, some schemes that have been introduced by banks as well, that allow payment holidays on mortgages, allow people to defer payments on loans, perhaps reducing the criteria when people are applying for a loan to tide them over these times. All of those things are likely to increase costs. So if I go to my bank and say, look, I need a mortgage holiday for 2 to 3 months, then fine. The bank knows that they're going to get their money back, and it will just be added on to the end of my mortgage term. But over those 3 months, they will lose a small fraction of income from that. And if you multiply that up by 200,000 or 300,000 customers, it becomes a significant amount of money. At the same time, there are also a lot of administrative costs. So most of the time with a mortgage, it's sold, all of the costs are incurred at the beginning. There's a basic level of administration that takes place over the life of the mortgage. But up until key points in the calendar where people think about remortgaging, and these tend to often be at fairly easily defined and predictable times. There's not a huge amount of admin that goes into the mortgage side. So anything like that is just going to increase costs and eat into those earnings. So again, tricky for finance. What they do have, though, is the potential to go from being perhaps the bad boys of the previous recession, the banking crisis of 2007 and 2008, into more, I'm not going to call them heroes, but certainly a force for good in this recession, as they do make loans to small businesses to keep them going, as they do allow mortgage deferrals and loan deferrals. So it can certainly help from an image perspective. And I don't want to make too big a deal of that, but I think image is important, and behavior now will have an impact on people's behavior and choices in the long term. Perhaps only at the margins, but the margins are important, and the margins can help determine whether your growth is 3% or 5%. So behavior now is pretty key. I think if you look at the specific issues that some of the banks might be facing, I mean, we've talked about the low spread or the small net interest margin. Operating costs are likely to go up in the short term. They may well come down in the long term as there's a systemic shift towards more online banking. The more and more that the people do transactions over the internet, the less and less banking staff will be needed. So not good for jobs, but good for costs. In the short term, stock price is an issue. We know that stock prices of banking stock or banking shares, they've fallen by about double the rest of the stock market. And again, that reflects people's attitudes to risk currently. They see the banking sector as a little bit of a risky game. But on the bright side, and it is very much a bright side, it's less of a balance sheet issue and more of an earnings issue. And I think the Economist put this quite nicely. There will definitely be earnings pressure as the net interest margin is low and as operating costs go up. But it's not a systemic, it's not an existential threat. It's not a balance sheet issue of the type we saw, over a decade ago with the toxic derivatives and bad debt in most of the banks. So I don't see a huge number of banking closures. There will inevitably be a small shakeout, I'm sure, but most banks, I think, will come out of it reasonably well. The issue will be in terms of marketing. It's more a holding pattern and a wait and see. I don't see any great need to go guns blazing for high growth, because I don't think that's going to happen in this environment anyway. Certainly if I had an existing relationship with a bank, with a mortgage and a current account, now is not the time I want to introduce more risk into my life by looking to swap provider. I've got an established payment pattern. I don't want to jeopardize that by going elsewhere. But I think it is all about building awareness, maintaining awareness, building consideration. And again, seeing what's going to happen in the future in those countries that are ahead of the curve. And again, I'm looking at Spain, perhaps France, definitely Italy, as they come out of the crisis period.
Fantastic, brilliant.
Can I jump in? Sorry, Claudia. Because I think there's a really good and key point from John there around about the risk and the opportunity to be seen as heroes or to be seen as doing good through this. So what we know is that consumers are really looking to banks for advice, for support, for things like payment holidays, for small business loans, maybe personal loans as well. But what we also know is that there's a real risk that banks could be seen as not supporting people through this. So as a good example, when Rishi Sunak announced that there would be small business loans, people immediately got on the phone to their banks, and that that caused a lot of banks to be at capacity, to the point where a lot of them on their websites now have capacity notifications saying, please don't call us unless it's something absolutely urgent. We know a lot of banks are going out with adverts right now talking about looking after the customer, protecting the customer, and so therefore, if you can back that up with good customer service, if you can be shown to be protecting them, there is a real opportunity. So I think when it comes to what banks should be marketing, that's a real space where you could emerge as with a much bigger market share, with a kind of more heroic customer view of yourself as a brand out of the back end of this, which I think is really exciting. But there is also lots of downside risk to not being able to support those customers.
It's definitely one area where retail was in a slightly more advantageous position, having already built up web search capability for Black Friday and other big events that the banks don't have a Black Friday as yet. I'm sure there's one only just around the corner. So yeah, definitely.